Ho, ho, ho! Merry Christmas. How's everybody doing? It's your boy Chicago Sean McLaughlin. I got Steve Strazza here. We're going to be talking Tesla. We're going to be talking some trades. But Strazza, what's happening, man? Where's your Christmas gear?
I just heard about this Santa hat thing. It was too late, you know.
I made a bold prediction before this thing started that Strazza wouldn't have a Christmas hat because it's not your fault, Strazza. You don't have kids at your house. See, I've got kids at my house. It's you have to have a Santa hat laying around. That's just part of the gig.
Yeah, I have some Christmas decorations, but it's definitely lacking, But what are you gonna do? I'm a bachelor, so.
Well, yeah, you're a bachelor and you're in Key West. That's like the least Christmas place I could think of.
Yeah, that's true too.
All right, the whole team was all chatting this morning, talking about the markets like we do on Wednesday mornings, and we were kind of riffing on, wow, what a U-turn the markets took this week, huh? I mean, Monday morning, goodness, if all you did was listen to the folks on Twitter or watch the TV, the financial TV, you would have thought that the market was about to go down 50% and everyone was going to be out of a job and the pitchforks would be standing outside the Federal Reserve. Now, 48 hours later, here we are, and the S&P looks like it wants to make another run at highs. What do you make of that, Strazza?
I mean, just the whole month of December, and you could argue really all of 2021 as we come into year end, but definitely December, there's been no follow through. And, we were complaining, or bears were complaining that, they couldn't get, or I'm sorry, bulls were complaining about the fact that there's been a lack of bullish follow through, but there's also been no bearish follow through. So we have one big up day, one big down day, and it's like rinse and repeat. And that's what you're seeing again. Now we're stringing together two really strong up days. All the right groups are working. Seeing consumer cyclicals and the risk on groups start to outperform again. It's all pretty constructive, I would say.
Yeah, and you and I talk to a lot of people, a lot of traders, and kind of the universal theme amongst everybody is right now, for the past month, it's been hard to take an aggressive stance in either direction, whether you're bullish or bearish. It's been so hard. I mean, obviously things are working, but man, you really gotta have balls of steel, somewhat to hold some of these positions.
I mean, we're in a range, right? So when you're trading ranges, you're prone to getting chopped up, and that's what's been happening to a lot of people.
All right.
See starts.
Yeah. So the trade, the stock that we were looking at today, with the theme being that, we don't want to get too aggressive here in anything. So we started looking for stocks that had some pullbacks, that had some juicy premium. And there were a couple names on our list, but the one that really stood out was Tesla. So if we could bring this chart up here, Tesla had a breakaway gap back in, I think it was early October. Looked like the stock was just going to scream to the moon, as they say. But right about early November, it started pulling back, and it's just been kind of grinding sideways. And lo and behold, we've now filled that gap from September. You can see on the chart here, we've filled this gap and we bounced exactly where we're supposed to bounce, right? I mean, not only is that a gap or that we filled a gap from September, but if you go way back to, I shouldn't say way back, but back to the beginning of the year, that level was significant resistance, right, Strazza?
And that's what we call, we love looking for stuff like this. This is definitely a level of interest. This is what we would say. There's a confluence of interest at this level. So we have those former highs from January, which are now acting, as support, their resistance back in Q1. We have the breakaway gap. So buyers and sellers are definitely watching that there. So this is just a very logical level to see this recent sell-off kind of pause and find a little tradable low. Also, I think it's worth saying, this is one of the best looking structural uptrends you'll find, Tesla, right? There aren't many better looking primary uptrends out there in the stock market. When you really zoom out on this chart, it's beautiful. It's gone nowhere this year. It's right back to where it was coming into the year in January. So
right.
If you wanted to get into Tesla and you've been waiting, well, nobody's made much money on it all year, and you have an excellent place to define your risk right now to get into this trade.
Well, it's funny that you say that the stock's gone nowhere because, yes, compared to January 1st of this year, the stock has done nothing. But look at this chart. I mean, we had a low of around 560, a high north of 1200. I mean, this thing has done nothing but do nothing.
Yeah, it'll move around a lot. But at the end of the day, on a year-to-date basis, I think it's still up like 30-40%, I think, as of today on a year-to-date basis. Not nothing, but if you look at other autos, Ford is up 125% this year. So it's not like you're really pressing along here, is the way I would look at this.
Right. And so here's what we're doing, Strazza, because we don't want to be aggressively long here. I mean, you can see in the chart we got that little to the moon thing with Elon Musk. Yeah, kind of tongue in cheek. JC put this chart together this morning, kind of as a joke. We're not making the bet here that Tesla is going to rip to new all-time highs anytime soon. It could happen. It absolutely could happen. But we're not making that bet. The bet that we are making is that as Tesla came down over the last 4 to 6 weeks, we've seen volatility spike, and that's true kind of across the board in a lot of names in the stock market right now. But the volatility came up with that downtrend in Tesla shares, and then even after the nice bounce that Tesla shares have had yesterday and today, the volatilities, while off of their highs, they're still very elevated. So what we're doing here is we are selling premium. We're putting on what's called a bull put spread. I should have shared the P&L graph here with you guys, but basically we're selling the 900 strike puts and we're protecting that position by buying the 850 puts. And we're doing it in the regular monthly January options. And we were able to put that spread on this morning. We collected $11 for the trade. That's the credit we received. And the bet we're making here is Tesla's going to hold above Monday's low, which was right around 900. That's the bet we're making. We're not getting wildly bullish here. In fact, somebody on Twitter was asking me, why didn't you buy calls here? Or why didn't you use the proceeds from selling that put spread to buy calls? And my answer was very simple. I'm not that bullish here in Tesla. I just think that the low that we saw on Monday is going to hold for the next few weeks. And that gives us as option sellers the opportunity to make some money. Nothing drastic has to happen here. Tesla just can grind sideways for the next 2 weeks, and that will play perfectly into our trade. So yes, we're bullish, but we're not crazy bullish. We're not thinking this is going to the moon anytime soon. It could, but we're making the bet that Tesla has found a short-term low around 900, and that's it.
This is a stop going down trade more than it's a start going up trade, right?
There you go. It's a stop going down.
And it makes sense, right? Because back to this is a secular leader. It's one of the strongest stocks in the market. When you zoom out over any long-term time frame, it's already down 30% since November. What more do you want? It's a 30% drawdown. It's just tagged together or put together 2 nice days. Had a hammer yesterday, nice gap higher today. Looks like it stopped going down to me.
Yeah. All right, so just to recap, the trade we put a Tesla bull put spread where we sold the January 900 puts and purchased the 850 puts in January for a net credit of $11. My game plan here is to take profits when I can buy the spread back and close it down for a 550 debit. I'm not going to hold this spread all the way to expiration. That's not my game plan. I want to take the cream off the top, take the quote unquote easy gain, if there is such a thing, and move on to the next trade. That's the way I manage trades like this. And if we see a close below 900, that's our signal to get out. That might not be, maybe that is the bottom. Maybe it trades below 900 and closes at 850 and then rips again higher. That's fine. But you know what? For me, for risk management purposes, if it's below 900, if we see a close below 900, then my thesis for being in the trade and our thesis for being in the trade is busted. And I'm not going to wrestle with a trade that's not doing what I think it should. So that's it. Any final words there, Strazza?
Why don't you just throw in and explain, well, like you were just explaining to me, how the margin requirement differs from just selling puts outright? I think
oh, sure. Yeah. Before we went live, you and I were talking. You had a question like, why didn't I just sell puts? And there's 2 reasons why I didn't just sell a naked put. Number one, I'm not comfortable holding risk with theoretically unlimited risk, right? I mean, I don't think it's going to happen, but Tesla could come out with some bad news, or Elon Musk can do some crazy tweet, or who knows? I mean, there's so many people watching this stock, and it has so many crazy reactions. But there's nothing to say that this stock can't have a gap down and open at $700 or $600 overnight after some bad news. So holding a naked put doesn't feel like the right move. I would not be able to sleep at night, and we all know that Shawnee likes to sleep, so I wouldn't like that. But then also we talked about the margin requirement, right? It's an expensive stock. It's a $1,000 a share stock. If I were to sell naked puts, depending on the strike I chose, the margin requirement on just one contract would be somewhere in the neighborhood of $16,000, $17,000, which that may be fine for many accounts, but not all accounts. But by creating the spread, the margin requirement for me is only about, what was it? It's $3,900.
Yeah.
It's a lot different than 16 grand, right? So just from a portfolio efficiency point of view and buying power efficiency point of view, the spread just makes more sense.
I think those are both great points. And yeah, especially the first one too. Not exactly the kind of stock you want to hold a position with unlimited downside risk. You know, a name like Tesla, we've seen the events and headlines, drive volatility in the stock. So totally.
Well, Steve Strazza, thanks for joining me today. And to all of you, this is our last live stream before Christmas. So Merry Christmas to you, or to whatever it is you celebrate. I hope you have a good one, and we'll catch you next week. Take care, everybody.
Happy holidays, everyone.